Today's video is going to be on volume. It's very important for day trading. It's used by all the traders, so I'm going to be telling you what it is and how it's used in day trading. Volume is probably the most important fundamental for a day trader to learn when they are first starting out. The definition of volume is it's the amount of shares traded in a certain time frame. Volume is shown visually with green and red bars that are made up of many transactions. For every person trying to buy a stock, there is an owner of that stock that is selling it to them. Volume is used heavily by day traders for technical analysis because it can show the amount of traders interested. Volume is typically used to see how the price will move. High volume is generally good for day traders. Volatility is simply based off volume. A stock is volatile when it is trading with lots of volume and not volatile when it is trading low volume. An example is, so a basic example would be if the new day just started and I have my one-day chart open, I buy 100 shares of LFMA, my friend buys 100 shares of the same stock, and another one of my friends buys 300 shares of that same stock. That would make the volume for the day 500. And this is what it looks like. Here's the level 2. This is the buyers, this is the sellers, and these are the orders that have gone through. How is volume useful during trading? Volume can be used to determine the strength of a setup and see if other traders are interested. So as you can see here, the volume right here was bigger than the volume right here, which allowed it for the price to move up and pass this resistance point right here and keep going even. It can also be used to determine the weakness of a setup. So right here, as you can see, it only had one good green candle, and after that it started fading, so there's the weakness. It can determine a fade or a rally. This is a fade and this is a rally. It can be used to spot smart money. Smart money is in institutional investors. I wouldn't worry about that right now. You can learn about that later. So I'm going to show you some volume in action. So as you can see here, right at the market open, the volume starts and it's at like 500K. It looks pretty good, but it slowly starts to rise. The volume, as you can see, it goes like 600K right here, and then it hits 835,000 right there. It hits 889,000 right there, and as you can see, it just keeps moving. And it stays steady above that 500K. Before it was, going anywhere from 271 to only 487. So this shows you how interested people are, because now there's almost twice as much more volume as there was before. So I'm going to also show you one more example if I could find one. So right here, as you can see, the volume earlier was much bigger than it is right here, and that's why I feel like it bounced off that 85, was because there wasn't enough volume and there wasn't enough demand. People just weren't interested enough. And yeah, volume can be used in many other ways. If you like this video, please check out the other videos in my playlist and please subscribe. And if you found this useful, please share it with somebody. Thank you.